can you trust the government not to change the rules when it comes to Roth? Currently, it's tax-free. Do you think the government's going to change it up and mess with Roth in the future? Let's talk about it next. Hey, this is Mel Stubbs. I'm a financial planner with Christy Capital Management, where we're helping federal employees prepare for retirement. One of the key aspects of retirement planning is tax planning. And many of you have large traditional TSP balances which are yet to be taxed. You have deferred the taxes until later, and at some point, later is going to be upon you. So some of the planning that we help people with is when is the right time to pay the taxes? And a lot of that involves Roth planning. But what if the government changes their mind on the rules? I was listening to a podcast called The Great Retirement Debate with Ed Slott and Jeff Levine. They bring up some good points, and I wanted to share some of them with you. The first thing is, back in the day, the government said that they would not tax Social Security. Nothing was written in stone about it. It was just kind of understood. And of course, they are currently taxing Social Security at some levels. That may be an example of where you can't trust the government. But for today's question, can you trust the government as it deals with the benefits that Roth offers? It's their opinion, and it's mine as well, that yes, you can. You can trust the government to keep their tax-freeness of Roth in place. So what are some of the benefits we're worried that we may be losing? Well, the first benefit is that the growth in a Roth account is tax-free for your entire lifetime and up to 10 years afterwards if a non-spouse inherits it. Now, there are a couple of rules where you need to follow, like with being 59 and a half when you touch your gains and having a Roth IRA account for at least 5 years before you touch the gain. If you follow those, the gains are generally tax-free. And because of this feature, Ed Slott says that Roth IRA is the best retirement account to have. The only question is, how much do you want to pay to get it? You see, you have to pay taxes to get the money in there. And I think we'd all agree that tax-free is better, but there is a price of admission, and that price is that you have to pay off the taxes that you owe before the money can go in. At certain tax rates, certainly it would make sense to pay it. At other tax rates, it may not make sense. So that'll be up to you. Another benefit is that there are no required minimum distributions during your lifetime. And a new rule starting in 2024 is that there's going to be no required minimum distributions from Roth TSP or Roth 401ks. So can you trust the government as it pertains to these? Well, Ed Slott thinks that Congress secretly loves and is addicted to Roth IRA. Back in 2010, Congress set up a provision where high-income earners could Roth convert in 2010 and pay zero taxes. You paid half the tax in 2011 and half the tax in 2012. It was a great feature if you could take advantage of it. And what Congress realized is that boatloads of taxes came in. People took advantage of it and more revenue came in. So soon after that in 2012, Roth TSP was first started. They expanded it to Roth 401ks and Roth 403bs and the other workplaces as well. In the Secure Act 2.0, which passed in 2022, they went all in for Roth. They now have SEP Roth IRAs, simple Roth IRAs, plus the provision where 529 accounts can get moved over to a Roth account under certain circumstances. They've worked out ways where you can have Roth matching contributions. Congress had their first instance where they're going to be forcing Roth contributions. It was supposed to start in 2024, but it got pushed back to 2026. And that's where if you are over the age of 50 and you want to do catch-up contributions and your income is above certain levels, you'll be forced to make the catch-up contributions go to Roth. So not only are they not discouraging it, they're adamantly encouraging Roth. And in some instances, they're forcing it. And that's because when people are contributing to Roth, they are not getting a tax deduction today. They're going ahead and paying the tax today, which means it's extra revenue for the government. If you read through the Secure Act bill, you'll find the new Roth provisions are entitled revenue provisions. They are viewing Roth as a way to collect more taxes now so that they're pro-Roth. So could they change their mind in the future? Well, I mean, who knows? But the tax law is definitely in writing, and so certain things would be grandfathered in. Maybe they fix a few things around the edges, but I can't imagine they're going to take away the tax-freeness of Roth. If you need help with your retirement plan, especially if you need help with your tax planning, reach out to us at christycapital.com. If you're wondering if it's too late to start Roth, check out this video right here. My name is Mel Stubbs. I'd love to talk with you about your tax planning situation, so reach out to us.